Hi guys. For this lesson we're going to go over the basics of support and resistance and explain how they can be used for trading. Right now we're taking a look at a screenshot of my trading platform. As we can see on this chart, there are clearly defined areas where price stops going higher, and there are also clearly defined areas where price stops going lower. These areas are known as support and resistance. An area of resistance is an area in which buyers begin to thin out and sellers begin to multiply in number. This causes price to stop moving higher and actually reverses price to send it lower. Areas of resistance can be thought of as areas of supply. An area of support is an area in which sellers begin to thin out and buyers begin to multiply in number. This causes price to stop moving lower and actually reverses price to send it higher. Areas of support can be thought of as areas of demand. Another important concept behind support and resistance is that the strength of these areas is dependent on how many times we have touched these support and resistance areas, as well as the time frame. For example, here we can see a strong support and resistance level, and we can see that price respected this level several times. Also, if you look at the daily time frame, here we can see another key support and resistance level, and since it is on a daily time frame, it should hold even more valid than intraday support and resistance. Support and resistance is a key component in my trading method. When used in conjunction with volume, price divergence, and momentum, we can have a pretty clear understanding of how price is going to behave. For example, let's take a look at a live chart of RIM. As we look back, we can see that there's an area here where price seems to respond to the 82 area. So this is our support and resistance context. Next, we see here that price broke below this 82 area on a day when the broad market is down. If we examine volume during this breakdown, we can see that it has remained relatively high. From here, we see price rally a bit and find its way back up to 82. Examining volume again reveals that volume was relatively low during this up move. The combination of a support and resistance context, a broad market direction, and bearish volumes suggests the retest of the 82 area would be an ideal entry point for a short position. As you can see, we would have been right in this situation as price moved down 75 cents on ascending volume. The trade I've just outlined is a good example of how finding and confirming trades by simply using support, resistance, and volume is a sound method and serves as the basis for my trading plan. As we stated in our previous lesson, our trading method does not contain any conventional types of indicators. That was a brief overview of support and resistance. In my course, I spent a good deal of time examining support and resistance in greater detail and actually explain why these levels exist, how exactly to use them, and what types of support and resistance may hold more valid than other areas. For our next lesson, we will discuss the differences and implications of being long versus being short. Until then, good luck with your trading.